Even though the inventory is relatively high, it's the one indicator that is keeping our market from really falling apart. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, July 24th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so that you can know how the market is impacting your options as a home seller or a home buyer. We always like to start off by looking at how the market has performed over the past week. There are 70 homes active on the market currently, down from the 74 we had last week, with the average asking price roughly the same at $1,812,000, down slightly from the $1,860,000 we had last week. 6 homes went pending, same as last week, with the average asking price of those pending sales showing some real improvement, over $100,000 in improvement there, $1,895,000 up from the $1,791,000 last week. And 9 homes closed this week, more than double the number we had last week. But the average sales price did drop to just under 1.8, where it was just under $2 million last week. So now that we know how the market performed over the past week, we can look at the broader trends and indicators that help us determine where the market might be heading. But before I do that, like always, if you do find this information helpful, you can hit that subscribe button down below so you don't miss out on future updates. And while you're down there, why don't you share it with a friend also? Everybody deserves to be in the know about their local real estate market. Okay, let's look at those broader indicators that I was talking about. Starting with inventory. Like I said, it has continued to slowly work its way back down to more normal numbers. It's not quite there yet, but we have 4 fewer homes active on the market compared to last week. That is still a high inventory level, higher than we would like to see with how sluggish the turnover rate has been, but any improvement is welcome. So we've been, steadily climbing since the beginning of the year, so it's nice to see a trend downwards. Speaking of that sluggish turnover rate, that did improve a little bit, but it is still well below that 50% line that we've been staying under for the majority of the year. It's been under that, like I said, for the majority of the year, and almost exclusively since the beginning of the year, or since, since February, except a few spikes here in April and May. The over-under number is rebounding again this week, and it remains well within the 1% range that demonstrates a more neutral market, not one that is heavily weighted towards buyers or sellers. That little bit of rebound after, having a significant drop-off last week. The thing that keeps the over-under number from really tanking is how well the lower price point market continues to perform, despite this weaker and slower overall market. And that lower price point performance is further demonstrated by the fact that the average closing price continued to drop this week. We've been seeing a significant drop lately and has been trending down since May. Over the past 30 days, the average sales price is below $1.7 million. If the over-under number was dropping as precipitously as this average closing price, I would be worried that home values are really starting to suffer. As it is, the fact that the over-under numbers remain neutral tells me that the average closing price drop has more to do with the consistent activity in the lower price range, more so than the actual home values in general suffering. The triple Q has continued to soften up this week. You can see it here, even though the overall trend is still well above where we started at the beginning of the year. It did fall 3% compared to last week, but like I said, it's still significantly up year to date. So this current dip is not horribly disrupting, but the prolonged softening in this fund could eventually eat up some of the our buyers' cash for down payments. The main reason why we track this fund is more to keep a temperature gauge on the tech industry, because a lot of buyers in our area work in that industry. The recent AI boom in SF and Silicon Valley is starting to push buyers in our direction. So while tech indexes might be down, I think we will continue to see tech money driving our housing market here in the Tri-Valley and specifically in San Ramon. Interest rates did not do the back and forth dance that we have seen for the past several weeks, but they're still hovering right around 6.5%. They didn't dip under that number this week like we have been seeing with this up and down reciprocation lately, but it's not really anything of great significance, just something that I noticed. Again, sitting right around 6.5%, which is a little bit better than we were at the same time last year. This week had one major encouraging trend. The inventory is coming back down. And that is significant, and it will keep our market from really starting to soften up completely. All the other trends and indicators have really hinged on that one fact. If inventory really started to climb for more and more homeowners, from more and more homeowners deciding to sell, I think you would see a dramatic reduction in value, with all the other metrics being what they are. The fact that interest rates and tax penalties are keeping homeowners from selling unless they absolutely have to is the only thing keeping our market from really falling out. I would expect the market to remain this sluggish through the rest of the year, as I don't count on the economy making any real improvement with the war in Iran continuing to drag out. But like I said, inventory remaining low will maintain this kind of neutral market that we've had. Thanks for joining me on this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit that subscribe button and ring the notification bell so you can stay informed on how the market continues to shape up this year. And if you have any questions about how you can navigate this often stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Thanks for joining me. Have a safe weekend, and I'll see you next week with a new update.